All right, welcome to Talking Investing. We are live with myself, Tom, and George is here, and special guest Seth.
Hello.
Hey, how's it
Hello.
going?
I'm scared of talking. I get very nervous on this channel.
It's a new browser. Actually, it's not a new browser. It's an old
Hey,
browser.
I don't want to tell people that I took and bought some Bitfarms today, so don't. Maybe Ben's watching, so.
Oh, they were going to ask you anyway, so you might as well.
Is this thing on? Hello? Yeah, they faked me out today too, just so you know. I got the FUD fake or the FOMO, I think. Yeah, I was FOMO today.
Greetings
FOMO.
to Barry and Alex and Sour Melon Gamings and Samuel and Brewdog. Welcome everybody.
Welcome to the stream.
So Seth Seth is somebody that George and I met at the Bitcoin conference, and we ate lunch together and had a really nice conversation, and so we've kind of been talking ever since. And there's some stuff he looks at that I don't look at as much, so throughout the stream today we're going to try and get to some Seth specialties, if you will.
That's the plan.
So take 2 minutes, Seth, and tell us who you are.
Sure. So kind of in short, I would say that I'm just a nerd. That is what I am. And so at my core, I just love all things technology. I love researching and just digging into understanding this big world of finance and politics and Bitcoin and cryptocurrencies. So all that type of stuff I find completely fascinating. And if you find me in my free time, you'll find that I'm either watching YouTube videos or researching things, and that's what I just love to do for fun. So over the years, I've just kind of built a plethora of just lots of technological information. My trade is I was a software engineer for many years. Now I'm into a management type position, and I get to lead a team that does what I love to do. So it's been a great blessing. I've had a lot of great opportunities in my life to kind of be in this space and know about it, but only fairly recently would I say that I really became, started investing in the space. I did know about Ethereum when it launched. I had a buddy who was part of the original, he actually works for Ethereum today. He told me all about it, and I was just like, oh yeah, smart contracts. Yeah, definitely, that'll be a thing of the day. And I even did a prototype with it, in him. I've filed multiple patents around the space. So I've been in the space, but I'm kicking myself very heavily that I did not really listen to my friend.
You knew at ground zero, you just didn't get in.
Yeah,
well, I can beat you whenever you're ready. I can beat you. Don't worry.
So in 2013, I was aware of the initial coin offering of Ethereum, and just was like, maybe that'll be something someday. Killing myself. Yeah.
You're not alone.
That's who I am.
Most people don't know this, but I'm a whale now in Bitcoin.
Oh boy.
Tom made me become a whale.
Uh-oh.
Yeah, I know.
Just gonna say hello to LWG and McNasty. Thanks for joining.
Just so you know, that's my other account too.
I was gonna say, is that you, George?
McNasty02. Yeah, I just.
Oh, that really is you. I got.
Yeah. Look at what I just sent.
I thought somebody had.
I sent a heart.
Oh, that was very nice. Thank you. Shout out to George McNasty.
I can honestly say, when George first reached out to me on the Discord channel, I yelled at my kids. I said, "Which one of your friends is messaging me? Something McNasty."
Poop McNasty?
They're like, we don't know who you're talking about. Oh wait, I might know this person.
That's George.
That is the big question. I'm not on, by the way. This isn't really me. This is a figment of my imagination. So why don't we go through some of the things that you look at, Seth? Some of your indicators.
All right. Well, let's start with the CBBI indicator is one of the big ones that I like to pay attention to. as we're going through this cycle. Now, I haven't known about this for very long, but when I found out about it, it really was kind of eye-opening. In fact, I found out about it probably in 2021, near the top where we were up there in the orange. And really what you're kind of looking at here, if you scroll up just a little bit, you'll kind of see at the top of the line there that you're seeing these different check boxes, and the different check boxes are an aggregation of different indicators that different traders have been using over the years to determine where the top of Bitcoin is and where the bottom of Bitcoin is. And I bring this up to your subscribers' attention because it's really important to kind of know, like, where are you at in this cycle? Like, when should you be selling and where should you be buying? And these indicators really help you get a good view of understanding where you're at. So as you can see, some of these indicators are showing us 0%. So meaning we are 0% close to the top of the Bitcoin cycle. And many of these are very low also. But if you aggregate that information together, what you will see—
I think we just hit the Pi cycle bottom.
Yeah.
Very recently.
The Pi cycle bottom. And
what in the heck are you guys talking about?
So
the
these
Pi
are
cycle—
all. This is why I'm having Seth talk about this one, because he's really familiar with this, and it looks like it pulls in a lot of other. There's so many different ways to look at Bitcoin. It gets overwhelming. So
Yeah.
I thought it'd be better. This one Seth really knows well. So
yeah, and it is true. And what's great is you can unselect some of these items here. Let's say you don't believe in that indicator or whatever. You can unselect them. It will re-aggregate the information and give you a different view into it.
So
But it overlays the current Bitcoin price and gives you a color coding of according to the indicator where it thinks we are at in the cycle. And when you're in the green or the dark green, basically the indicators are telling you you are either at a bottom or near a bottom. And if you look historically at the times where we've been in the greens and the dark greens, those have almost pinpointed exactly where the bottom was.
Yeah, so if I go to March of 2020, which obviously we all remember that one, we just zoomed right down to the green and hit a low and then started to come up. So that corresponded like right on the money.
Yeah.
And then we never even, that's interesting, we never got to the green in July, which was a pretty short down cycle, but that was rough at the time. I don't know if you guys remember last summer, there was a bad month in there, and now here we are again in the dark green.
So just based upon these indicators, those that are out there feeling very beaten up in the markets, which I am one of them, Tom, you guys are all part of this. We are in that dark green, which means there is a lot of panic, right? There's a lot of fear. There's a lot of uncertainty that's out there, which is what causes these moments, in the green where you have full capitulation of the price down to what we call it, a bottom. And so these are the times to be accumulating. Will you ever pick the exact bottom of the Bitcoin price? No, you will not. Will you ever pick the exact bottom of the miner's price? No, you will not. But these are the times to be accumulating because, and you are aware of this, Tom, when we were at the Bitcoin conference, Ryan O'Leary, or Kevin O'Leary, he talked about, basically his vision for where these crypto companies are going to be in the future is going to be the 12th sector of the S&P 500. That was an exact quote from him. And I actually fully agree with what he said. I do see that you will see a new sector on the S&P 500, and it will be dedicated to companies that are like Stripe, companies that are like the Flexa network. There's these players that are out there that are going to be huge. And
there's a decent amount of these companies already.
Yeah,
they're just shoved into other categories right now because this is not its own sector yet. Yeah. But it's definitely clearly its own thing. And you're right, Kevin O'Leary talks about that all the time. I'm just going to go through a couple more of these. I mean, you can see these dark greens. It's like every single time we're dark green, that was the absolute bottom. So, I mean, and again, I always like to say, this is just one indicator, although this is almost an aggregator of several indicators, I think, really, Seth, right? I mean,
Yeah, it is. So it's looking at sentiment analysis, and it's also looking at other just cycle type indicators and aggregating those together. Yeah.
so we'll add this. I try to limit the amount of stuff I throw at everybody from a technical standpoint, because I know for some people it's just boring, number one, and two, there's just so many that it's hard to get to everything. But this is very interesting. I like this a lot.
So somebody's asking, like, how can they get to this website?
So I think the website itself is colintalkscrypto.com. And then on there, you'll see a link to the CBBI. So I don't know if this is something he created and he aggregates these and uses this, or...
Yeah, from what I understand, Colin had got his own crypto channel, and I was watching his channel one day. I heard about it, and I went out there, checked it out, and I was like, wow, this is great. Right, this is what I should be using to help give me an understanding of where we're at with things. Are we at a top? Should I be selling right now? Or are we, near a bottom? Should I be buying right now? Not financial advice.
And these are the things, and what I like that this aggregates a lot of different things, because, the bottom line is, and I've talked about this in my last couple of videos, it is really hard. What Seth said, we're not going to pick the bottom. And, there's been a little bit of the last couple weeks we've had some pullbacks, so there have been, I get 99% positive comments, so I want to thank everybody for that. But there's a few people that are angry, like, oh, I wish you hadn't have said Bitfarms was good. And it's like, this is a long game, and charts like this help it helps you hold those positions that otherwise, it's if you hold Bitfarms right now, it might be pretty natural to be panicking. But, if you dig deep and your stocks through and through, and you have indicators like this where you can see, okay, this supports. All right, you know what? Bitcoin's at a bottoming out right now, and that's kind of what I've been saying on the channel for the last month. I think we're in the bottoming out process, and I think this chart really agrees with that a lot. It's, we're not off to the races yet, but we've hit dark green, and I think we're moving into light green. So this is all this corresponds with, I think a lot of what we talk about on the channel. And this is the stuff that helps you put your head on your pillow at night and not panic sell everything. If you're a day trader or a very short-term swing trader, then, maybe this isn't the indicator for you. But, if you're a buy and hold for the long term, these are the types of things that can give you, I'm going to say, that give you comfort. I mean, you can see this is not just a one-off. This has been accurate over time. And again, these are all always right until they're wrong. So I never use just one thing, but as you start to look at more and more stuff and they all start to tell you the same thing, this is how you get comfortable with investing your money and staying invested.
So my question would be, so does this chart, I mean, obviously it's saying we're nearing the bottom, but does this say that we're going, where is it going to go next? How high is it going to go when it starts to go? You know what I mean? That's my question.
So if you want to pull up, I sent you an email. There's an image I sent you. I don't know if you want to pull that up. But I think that might give you a little bit of an indication, maybe what's coming next, and what could happen in the near future. Larry in the chat, he says, I'm very confident in crypto after the housing crisis next year. And I will say, Larry, you are probably very accurate in that. We can't continue to raise rates and prices to continue to go up in the housing market and not expect there to be a very sharp correction. So, but the housing market and the crypto market are not the same, right? I know so if you can imagine, like, people might want to sell their home. Well, if they sell their home, they're gonna have more money. And if they have more money, then, who knows? They might throw it into the crypto market, and that might do things to the crypto market, right? So those are two different markets. Don't think that they run on the same schedule.
I wanted to answer, Barry asked me, is Tom going to sell when this chart hits red? So this will be a chart that I look at. I never buy or sell just on any one thing, but if this is confirming, I mean, you guys see my thought process. I make videos, and if this chart is confirming what I'm thinking, yeah, when we get near a top, I'm not going to hold. I will buy and hold some of my positions for, you know, years and years and years and years. But I'll take profits and trim my position accordingly as these things get near what's an obvious, you know, overbought territory. And I try to use some options to play into that in addition to that. So that's my swing trading that I do. But yeah, I mean, if this goes from all the way from dark green to orange, that's, you know, and that's agreeing, and it probably will be agreeing with the other things I look at, then I will definitely trim my positions. But I think for me, Bitcoin, I'm willing to ask myself, where's it going to be in 5 years, 10 years, 15 years, 20 years? So some parts of my positions I will hold on because I do think, you know, they're just going to go up for the foreseeable future if you've picked the right, you know, and obviously you got to pick the right stock, or if you're just straight in Bitcoin. You know, obviously you can just invest straight in Bitcoin if you want to. I do not leverage. There's a couple of people that are pushing leverage right now and I thought leverage was going away, but I've seen a couple other YouTubers advertising 100x leverage. So this is not financial advice, but I'm just telling you strongly that I do not participate in even 2x leverage, never mind 100x leverage.
I could tell you the most anxiety I've ever had in my life is when I was playing with leverage, and I lost the most money the fastest, and I will never do it again.
It's too easy to lose it all. I mean, when you're playing with 20x or 50x or 100x, like all they got to do is blink and your money's gone.
It's not worth it. Were you able to pull up that other chart?
No, I didn't see the email. I can't.
It came from Talking and Investing.
All right. Well, while we're looking at it said, seriously, Tom, you showed a chart of miners' performance per exahash this week, and I'm wondering why there is such a difference and where is the difference coming from. So I did, and I'll show that again this weekend. And as I do each Bitcoin miner update, I'm trying to show how each Bitcoin miner did this month versus the July chart. And that's a simple calculation of just, here's how many Bitcoin they mined, here's the exahash they're running at. And you will see there's absolutely a big difference. There's some of these Bitcoin miners are I just call it my efficiency number, and some of them are much more efficient than others. Riot, somebody got all over me about Core Scientific because I'm not going to say I called them out, but I pointed out the fact that, you know, their exahash, they've added 6 exahash this year, and they're basically mining the same amount of Bitcoin. So, like, their efficiency rating just keeps getting lower and lower. Now, maybe they're curtailing their energy. Maybe they're getting, you know, payments in some other way for that. But I'd love to know, you know, Riot was very clear. They had a month where their number dropped off the map into the 90s. You know, 130 is a great number. Better than that's even better. They dropped into the 90s, but they also said, hey, you know, we got $9.5 million in tax credits this month. So, you know, I don't mind seeing them offset one for the other if they're getting compensated. Actually, they got compensated at an even greater rate than the Bitcoin that they would have mined. Now, they're a Bitcoin miner, so, you know, I want them to keep mining Bitcoin. But, and as for why some of these are at, you know, 100 or 110 versus 130, I just look at the numbers and I make judgments on that because it's pretty consistent over time. The miners that are, you know, 130, they typically tend to stay around there, and so, you know, I've got kind of my A miners for efficiency and my B miners. Do you look at any of that, Seth or George? Anybody?
I like the B miners.
To be a miner. So something I think that is worth talking about, I don't know if you guys have talked about this yet. And we have talked about ESG. We've talked about some of the environmental concerns around, you know, Bitcoin mining, and, you know, is that going to cause problems in the future? When I look at that, in all honesty, what I see is you have these Bitcoin miners actually getting the funding and the investment to actually help stabilize the electrical grid. And, some people don't quite understand how our electrical grid actually works and what are some of the things that it needs. Most power companies, they want a constant, a constant amount of power draw, right? They don't want to have to constantly be lowering their production and raising their production and lowering their production and raising their production. They would like to keep it even and constant. And that's actually something that these Bitcoin miner companies actually can do very efficiently, very effectively. And I know that Bitcoin miners that are located here in Texas, they've actually got they actually have a connection with ERCOT, our centralized power consortium. And when they are running low on capacity, they give them the heads up to, hey, can you spin down your miners? And they can. That is a huge benefit to the grid. That stabilizes the grid in ways that people are not talking about right now. So when people are putting all this FUD out there about Bitcoin being so energy intensive and that's a bad thing, in many ways it can still be a good thing because it helps stabilize the grid.
And I would agree with that, and I would just add that, and this is something, this point is going to end up being understood. It is the ultimate FUD right now, but the truth is, and you're there in Texas, the amount of energy supply that's being added in Texas is massive, and probably the biggest reason is the migration of the Bitcoin miners to do what Seth talked about, which is, support that base amount of customer that they need, because obviously the Bitcoin miners can run 24/7 if they want to. So, they'll be all too glad to add to the power grid. And a lot of it's in a green way if they've got that base customer. It's like owning not that any of us can relate to this, but it's like owning a gigantic plaza. If you get that anchor store, if you get that rent from that, then it's easy to fill out the rest of the. So it's the same concept, and it's this is how the energy grid gets from here to there, in my opinion.
Yeah. So I watched a kind of a documentary in regard to how Bitcoin can also help with the methane that's being released into the atmosphere. And one of the issues that happens with just oil drilling in general, once you hit an oil pocket and you get into that layer, sitting on top of that layer is massive amounts of natural gas, right? In order to actually pump out a lot of that oil, they have to vent the natural gas out. So they either will, light a fire on top of it and just let it burn until they can finally get to it, which is just releasing all kinds of carbon into the air, or they vent it. They just let it go and just let it breathe out into the atmosphere, which is far more toxic than than even burning it. But if you can, so what I've seen is that they will actually go and get a generator, one of these large power plants. They'll buy a few of these Antminer, modulars. They'll set up a Starlink or another satellite internet connection on these things, and they will use that to burn off in an economical way while mining Bitcoin and generating energy and electricity, and getting a revenue off that. I mean, that is like a triple win, for those type of setups. Why would we not be doing this?
I agree. It's and I know, and this is where I don't want to get too deep into the ESG because that could be its own separate series and channel, but I know that.
And we get demonetized.
Yeah, plus which they like to demonetize that. I know that HUT uses a lot of that gas that would have been burned off. So, that helps that company, provide more energy. They're getting paid for what they would have otherwise had to waste in one way or the other. I mean, that energy was not going to get used no matter what. So now we found a way to actually use that to mine Bitcoin, giving the energy companies more revenue. So, I know that HUT has a big partnership with an energy company in Canada that I'm sure a lot of their expansion is because they have HUT as just a nice base that is going to be there as they want to continue to grow things. And obviously, like, everybody's in Texas at this point. That happened fast. When when people left China, I think they looked around and Texas somehow made a smart move, in my opinion. And
Yeah, they did.
I think they recruited and said, "Come here."
Well, our Senator Ted Cruz, I mean, he went right out in front and said, "Hey, we're pro Bitcoin and pro cryptocurrency." And once he did that, that like green lit all these companies to run to Texas really quick.
And Tom can tell you that we went and talked to a mayor, and because I have a building in Georgia, I have a couple buildings in Georgia, and we were going to do mining there, and they were nothing but
We had the
putting up
opposite
roadblocks.
experience.
Yeah, they didn't. Well, and they have they're the only state right now that has surplus power. They're actually helping out other states.
I don't know that that's fully true. And the reason why I'm saying that is there have been hydropower power plants that have been built across America that have literally been shut off because we've outsourced so much of our manufacturing in this company to other countries that those hydropower plants didn't have enough pull on them to even make it worth their while to even turn them on or maintain them. And so there's actually hydro dams today throughout America that literally are not being used and could be. Right.
So are those all potential future Bitcoin mining sites?
Yes, or nearby.
Right.
They've also been, these solar fusion plants that we built out in the middle of the desert. They got shut down because they just couldn't make the numbers work. They couldn't make them sustainable for how much repair they had to go into them. And these are all opportunities to have miners nearby in order to really sustain the grid. We also don't have, honestly, we don't have enough nuclear power in this country. I did my internship at the Idaho National Laboratory, and we were there on site where they've got their own prototyped nuclear factory, and a lot of people were kind of twiddling their thumbs, honestly, because the country just was not happy with this whole fear and scare of nuclear, which is the most efficient, and honestly, it is the most safe. If you look at coal and if you look at these other sources of energy that we have today, which is a large portion of our economy, these are far more dangerous and caustic to the environment than nuclear ever was.
And there's been, so you want to talk about FUD? I mean, nuclear power plants have had the ultimate amount of FUD for the last 40 to 50 years. And there have been a couple of things that people can point to that really, if everybody, understood it at a deeper level, and not everybody, we can't all sit here and dig into everything, but like Seth was saying, the precautions that are taken in a properly built plant, the amount of waste is so much less than really any other form of energy. There's very little waste. It's a very secure situation. So I don't know. I think we'll see us move more towards nuclear, but there is, there's a faction of people that are just terrified of that, and I understand. I mean, it's a scary word. We all grew up to learn that as a scary word.
Yeah. Well, and I just got some smart news that, you guys are smarter than me on this stream, just so you know. I want to thank you. But listen, I never even thought of it for a second. If Stacey Abrams wins Georgia, not saying there's anything wrong with that person winning Georgia, but if somebody just wrote, you know what, they could come after the miners. I was just like, I didn't even think of that.
Isn't Stacey Abrams the president of the world? Is that Stacey Abrams?
No, but I never even thought about it. He's so right. Thanks for that comment. I was like, whoa. I mean, all of a sudden you get a new administration and that's not favorable to Bitcoin. And then, what happened. I mean, look at what happened in New York.
That's a lot more likely to happen in Georgia than it is in Texas. I think they're pretty safe in Texas. But you're right, in Georgia, and what you just said, New York, a lot of these Bitcoin miners have already gotten burned big time. It's really, DigiHost, unfortunately, I don't think they're going to make it. And that's New York. They crushed them. And that's not alone. There are several miners that just got brutalized.
Yeah, no, I mean, and we realize now how to say this in a politically correct way, how much having different people with different philosophies can change the environment that we currently live in. How about that? That's nice, right?
I just want to address a couple of the comments. Martin is saying, how long can miners survive at Bitcoin under 20,000? That worries me. So it definitely depends on the Bitcoin miner, because that's another chart that I put together. All these miners have different costs per Bitcoin. So there's a bunch of them that, and what I look at is direct cost, not including depreciation, because that's a non-cash item. So obviously you could depreciate whatever you want. You don't run out of money from depreciation. So there's an awful lot of the miners that, you know, their direct cost is still in the $10, $11, $12,000 range. And so they'll be fine for a long time. But there are some others that their costs are much higher than that. The worst ones on my list, I think, were more like $20,000. So they're sitting there just breaking even right now. So, you know, unless they're holding them for later, which, you know, a lot of people have abandoned that as well. You guys have noticed, I'm sure, the HODL strategy has all but disappeared. I think we have Marathon and Hut that are still 100% hodling. And I heard rumors that Marathon might start selling some of those.
Can I give a suggestion to those miners if they're listening?
Absolutely.
Use this website, and when you get into the orange, then you capitulate and start selling some. You don't even have to sell all of it. Just, you know, let some go. It's okay. But when you get down to these levels, that's when you should be either buying or holding, right?
The companies that got caught, and a couple of them got caught, and their stocks have gotten beaten up, and some of them deserve it, and some of them, you know, it is what it is, and they've moved past it. But I think a lot of these Bitcoin miners, I mean, you guys remember, there was a press release twice a month. Oh, here's a new miner. They're going to be at 20 exahash. Here's another new miner. They're going to be at 25 exahash. And like the exahash race was on, so people were spending money like it was, you know, an endless supply, but they didn't want to sell their Bitcoin because at the same time you had, you know, the likes of Plan B and everybody saying, you know, is by the end of 2021, you know, is Bitcoin going to be at 100,000 or 200,000 or 500,000? So a lot of them, I think, got caught into that mindset where, you know, all of a sudden the exact opposite of everything I just said happened. And then they had to liquidate to continue doing business, unfortunately. So
what's kind of crazy about that is at the time that all that stuff was coming out, I had found out about the Pi cycle chart and was researching this thing. And I was like, man, it is bizarre how accurate this indicator is. And I was watching that Pi cycle indicator come up, and it was getting closer and getting closer and getting closer. And it, like, almost to the day those babies crossed, tons of people capitulated and sold. And that was the top of the market, like almost to the day. So, I mean, you can call Plan B whatever, but that Pi cycle indicator shocked me how surprising
it worked at the top and it worked at the bottom.
Yeah.
I mean, unless we get surprised here, and I think George is of the opinion we got more pain ahead, but I think we're bottoming out. I think 17.5, we flashed down to that. I don't think we're going lower than that. But George, you might have a different opinion.
So I don't know. I sent you that email with that screenshot. Are you able to
let's see if I can do it. Where'd you send it to, Seth?
The email you just sent me.
Oh, georgiacasby.com? I don't care if anybody has it.
That's the secret one.
No, I'm a little slow. I'm a little bit country. I don't have it. Maybe it went to spam.
I'm
a little bit rock and roll.
Someone share Seth's chart with Elon and remind him Bitcoin is a third cheaper than the last time you bought it. And, you know, that is kind of a sad thing. You know, I look at, like, even Saylor, like when he was out there just shilling the crap out of Bitcoin and buying, like, all these investors came to Saylor and were more than willing to give their money to him so he could go buy Bitcoin, honestly knowing that it was like the top of the market. They all knew that this thing was coming out from underneath his legs and were just giving him money to go, like, throw into the dumpster so they could basically get, you know, I don't know what they were trying to do, but I think it was very predatory what they did, honestly.
It's the difference between doing a deep dive on the technicals or just watching TV and watching YouTube and watching all the, there was a frenzy. I mean, I know all you guys remember. It was like, even though the charts were saying the opposite, everybody was like, Plan B picked a couple of months in a row where he was pretty close to where it closed, and then it was going to be 98,000 and 147,000, and so there were an awful lot of retail people, and I think some of the corporate got caught up into this FOMO. That is the ultimate definition of FOMO. When something's at the top, it's overbought, but you're chasing it because you're convinced you've already missed the boat and you don't want to miss the rest. So,
yeah. You guys want to bring up the Bitcoin dominance chart? We can talk through that a little bit. That could be fun.
yeah, let's.
As you do that, let me say something just because I like to toot my own horn. And that is when the market was at $3 trillion cryptocurrency, I said, listen, guys, don't be excited. It's going to less than $1 trillion. You guys thought I was nuts, out of my mind. And where did it go? No one, everybody, listen, do I want it to go up? Yes, I want it to go up. I want it to go through the roof. But I think there's more pain coming because you know why?
Let's hear it.
Does anybody know why? Because of open up your window and see what's going on in the world out there. Okay, and that's the reason why it's going down. It has nothing to do with the technicals. Bitcoin overall in the next, year should see some type of recovery. It might take 2 years for a serious recovery, but 5 years from now, you can't make a better decision, not financial advice, than going into crypto. I'm not saying Bitcoin's the best. I'm saying that you need to have a variety of coins personally. I think you should have a variety of coins because, you can't put all your eggs in one basket, even with Bitcoin. There's so many great opportunities out there that are going to, 10x, 20x, 30x. And I believe those are going to, 30x probably in the next, 18 months. And where can you go right now and get a 30x 18 months? You ain't getting in the stock market anymore.
And there haven't, 30x's happened, but they're few and far between. And there have been a couple of times recently where people started to get used to this 10x, 20x thing. And that is not normal. So everybody's got to recalibrate to.
So zoom out a little bit on this Bitcoin chart.
Thanks, guys, for agreeing with me. Woohoo!
Oops. Why isn't it doing
I've known since 2019. Whatever George says happens in the future.
Can you launch? There you go. Launch the full chart.
XRP,
There we
baby.
go.
We're going to talk about Fed now as they get set up for this
I'm going to go
next
to the 1
segment.
day, Seth.
Okay.
We're Fed now. Tom and I
actually go to the 1 week. Go to the 1
Tom
week.
and I, as we were sitting here getting ready for this, we sat there and we analyzed Fed Now. And Fed Now is FUD, by the way. 100% FUD.
So the dominance chart, keep scrolling it down, kind of shrink it out a little bit. Actually, double click the that
Get rid of that.
percentage column. That'll shrink it for you.
Oh, really?
Whoa.
Yeah, if you double click it, it'll fit it.
There we go.
So if you really zoom out, you'll see that Bitcoin's been on like a trajectory kind of down in the dominance, just overall in general. If you zoom out even further, but what you'll see is that right now we are basically stuck in a range, like a wedge range, and we are coming to the bottom of that range. And so what that means, and it's really something that we all need to be paying attention to, especially if you're looking at the Bitcoin miners, is if you're investing in Bitcoin, you need to understand that how Bitcoin is being dominant to the other cryptocurrencies that are out there. It's very important to keep track of this because there are times in which Bitcoin does very well, and there's times that Bitcoin doesn't do as well to everything else, and they call that alt season, right? So at the time when you see Bitcoin dominance falling, that's alt season. And that's when, investors are shifting their money out of Bitcoin and into other currencies, other smaller tokens, but they will switch back, right? So there's different cycles that are happening that you need to be aware of. Right now, we've been technically kind of in an alt season. It doesn't feel like it, but really, if you look at the dominance of Bitcoin, it's been falling, 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 and we're now at the bottom of a channel. And if we break that channel to the downside, that will trigger another large alt season, right? Because you are breaking a major trend. Now, if we get a bounce at this level where we start going back up, then Bitcoin will do fairly well, right? So Bitcoin will be gaining dominance. Its price probably will start recovering. So I just want to bring this up for context to be paying attention to these things. You like if you're interested in this space, what I would recommend to you is go to TradingView, which this is, pull up every dominance chart that they have available. And there's a bunch of them. There's probably 30 or 40 of them out there, maybe more. They're all the bigger coins that are available to you, but you can see very clearly which of the larger coins are getting the favoritism, which ones are breaking out of channels, right? So you'll see some just get rejected along a descending channel, but then it'll break above that channel. And once that happens, you'll see almost without a doubt that coin then takes off. You'll see Ethereum do this. You'll see Bitcoin do this. All the coins will do this. And if you're not watching the dominance channels, then you are not necessarily getting in at the right times, right? Not necessarily knowing when it's time to be in and when it's maybe time to be out. So I'll just throw that out there for everybody to kind of be aware of, that they need to be thinking about.
So somebody brought up a point that, you got to keep in the back of your head. Let's Gamble said the chart doesn't make sense, and I don't necessarily agree with that, but he brings up a valid point. Please look at the Bitcoin dominance without stable coins. So the that's the reason, we had Bitcoin dominance up here. We had Bitcoin dominance up at 95%. Stable coins went from virtually nothing to, they're what, 120, 150 billion dollars right now altogether if you add them all up. So that's the reason in general. But for me, you can see Seth and I did not coordinate on this before, and I've had two lines on this chart, and it hit. This was June 6th, the week of June 6th. Well, that was the bottom. And right, and now we're here at the other end. Right, because from June 6th to what? Was it July? July and August we had our couple of month rally up. So in any event, we're trading within this range, and we're about to retest this line. So, and that's where Seth started, basically. We're going to retest this line. If we go below this line, that's bad news for Bitcoin. It's good news for altcoins. But for me, I think we'll bounce off of this line.
So there's another line to draw, and that line is from the bottom there of that box you have on the left.
Back
and then
here.
Draw it to connecting the bottom of these ones that you're bouncing along.
So I'll just get rid of that box. I don't even remember what.
So I know you like to draw straight lines. I like to draw trend lines.
Yeah, I just went to that by default. That's not what I wanted to do.
And just, Seth's opinions are Seth's opinions. I'm not saying I agree with them or Tom agree with them, but that they're his opinions. Make your own opinions and financial decisions with your money. If you can afford the risk, do it. If you can't afford the risk, don't do it. That's what I would tell anybody. Sorry.
So Tom, how you just drew that line is exactly how it's on my chart, which is showing that you are sitting right on that line.
Yeah, that's true. That's a great line.
But here's what I will say about this. How old is Bitcoin right now?
It's
over a decade.
2009, I think it would be, right?
Yeah.
So to say that we have gone through all the, ups and downs and have really developed a pattern, I don't really agree with that yet. And that's the reason why I say it's going down. Because I don't believe it's developed a pattern.
Well, all these patterns work until they break. But, if you're looking at, and that's why I always say don't just look at one indicator, because, and I've gotten caught up in that. I could tell you I got caught up in that yesterday. I was looking at the MACD on the 4-hour time frame, and I had been looking at that for a few days, and I thought that was telling me where we were going, and I got too focused on that one thing. You gotta look at a lot of these things together and start to get a consensus. You know, the last chart that Seth just showed us, the CBBI, showed it looks like we're bottoming out. This chart, if we draw this trend line, it shows us it looks like we're bottoming out right now. So, you know, if there's 5 or 10 things you're looking at and they're all saying the same thing, that's not 100% guarantee it's going to happen, but you know, nothing's 100% guarantee. If you're going to invest, you know, at least you can have some comfort that this is certainly what the technicals are saying. So
there was another indicator that I was also using to help me really kind of gauge where we were headed with Bitcoin when it, you know, basically when it started selling off. And I knew in advance that it was probably coming. If you want to pull it up on your chart, I think you would like to see it. Pull up like the Bitcoin chart, okay, and then add an indicator to that chart.
Which one do we want?
And the name of the chart is Cipher, CIPHER underscore B underscore free.
The letter B
with
free. Buy and sell, this right here?
I don't think it's got buy, well, maybe it does. Yeah, so that's the chart. So go ahead and pull that up.
So I've never looked at this chart, so this is new to me.
Yeah, if you want to hide your little MACD one or your RSI one.
Oh, I must have pressed the wrong button. Hold on.
You see our show prep, guys? This is what we do, the show prep, just so you know. Hey, anybody have any questions, put them in there.
Yeah, put them in there. So change your view to look at a, let's do a 1 week.
Oh, yeah, this is on the 15 minute.
Yeah. I want you to kind of zoom out a little bit. So this Cipher B kind of looks like a MACD indicator. But what I'll tell you is this is a,
wow.
Some of the pro traders are using an indicator that's very similar to this one. And this one mimics it very closely, but this one's free. So that's why I bring it up to your users to see.
Be free, gotcha.
Yeah, be free. But it does a good job of basically giving you a pre-indicator of like the MACD. So what I mean is when the MACD finally crosses, unfortunately what's happening is there's so many counter traders out there that they know that inexperienced traders will go long on a MACD cross, that they will do things to manipulate the market. And they will liquidate your position doing that. So unfortunately, the MACD is great, minus the fact that everyone knows about it and they're using it to manipulate the markets. And I've seen this multiple times, you know, where you'll see a crossover happen. I'll think, okay, now's a good time to get in. Was the worst time to get in. Got it, you know, my position pulled right out from under me. Had to cover. And then 2 seconds later, it shoots right back up and then it crosses it. And then it's, you know, I'm like, what happened here, right? But this one, what it'll do, it gives you an early indication of where the, kind of like where the tops are and where the bottoms are when you're looking at a week chart. And it gives you that early signal of, hey, things are starting to move in the other direction. And it looks for divergence that's happening, you know, to give you that early indication of when you're kind of at that bottom. So what I want to bring here is like, look at the one that you see in the, that comes way down all the way to the very bottom on the left.
Oh, all the way over here?
No, the other one, the one in the middle, I guess. Like, look at the date on that. Like, when does that happen?
Yeah, that was December 18. So there you go.
Okay, so now double click this chart and bring up your price chart.
Yeah, that's going to correspond. I got to bring this down, but.
So yeah, just double click the price there and it'll.
Oh,
yeah.
If I do this.
Well, If you double click the pane, it maximizes. If you double click the right hand side, it'll shrink everything so you can see it. Yeah, so there you go. That's fine. I'll let you do it.
And that'll make this bigger. Oh, yeah, I gotta do this.
Next time, Tom's going to let me run the stream. Just kidding.
I've said I'm slightly technologically.
Yeah.
For some reason, I used to be good at this, but okay. So yeah, I mean, so I think Seth, we were looking at this one right here, and you know that was this giant bottom right here.
So that indicator did a really good job of picking out the bottom and when it was time to go long. And then vice versa, you look at that peak that happened on the weekly chart, that did a really good job of figuring out like, you know, that was kind of the peak. You were oversold or overbought, I should say, and it was time to sell, and it was probably not coming back. Now look at where we're at today.
So now we get, so what is this telling you when you look at this?
So it's telling me that we came all the way back down to that same level that we were at before, meaning, you know, sell pressure.
Right.
And we've already come underneath that and have already started crossing back up above it. And so you're at basically historically a bottom, according to this chart. And so once again, it's telling me this is a buy zone, right? Not necessarily you've found the exact bottom. This is the point of what you're never going to get any lower, but it is telling you, hey, we're starting to make progress back to the upside, and now's a good time to accumulate.
And the thing is, remember, as you look at all these indicators, and that's why I wanted to bring Seth on and introduce a few more that, you know, I don't really use, but he knows very well. The more of these that you look at and the more confirmation you get, if you're thinking of something and you're looking to make a buying decision, you know, sometimes like what I just said, I got focused, and it's my own, I mean, that's my own rule number one. Don't look at any one indicator. And I really got focused on the MACD on the 4-hour time frame of all things. And, you know, I ignored the bigger picture. And I did say in my video, I even said in my video yesterday, I think I'm getting fooled. And I was. So a lot of good that did me.
They got you.
Yeah, they got me, but that's my fault. You know, you got to look at everything, and if there was a chart that told you the exact bottom, then everybody would be a billionaire. So, you know, you got to do your due diligence and do the rest of the stuff, but this is all a part of that. So, these are a couple of new, I don't want to overwhelm everybody, but there's 2 new indicators that I've never talked about on this channel. So if you guys use TradingView, and if you don't, you should.
It's great. It's free.
Right. TradingView is free, and this indicator is free on TradingView. You can get upgraded versions and get lots of other stuff as well. But, I mean, there's so much free stuff on here. It's, if you're not on this, yeah, I mean,
yeah,
they're not a sponsor of our channel, but I use this program all day, every day.
So another thing that I thought was really important for your, viewer or your subscribers to really kind of understand is how Fibonacci levels are being used in the stock market and in the crypto market. And I think you'll be rather shocked and surprised how prevalent they are, because
Hello?
I think Seth might have cut out for a minute. We'll see if we get him back.
You know, it's time to sell and
There you
turn
go.
back down.
All right, we lost you for just 1 minute, Seth, but you're
I think
back.
we lost him again. Is he back?
Am I here?
You're there.
Yeah.
You're there.
Yeah, that's probably, I got too much going on my computer. So what I was saying was, you know, I think it's important for people to understand and know how Fibonacci numbers are being used in order to understand price discovery, right? So price discovery meaning that the price has never been this high before. Well, how high is it going to go before it hits a top and turns back around and goes back down? And the Fibonacci numbers and levels are being used very heavily by traders, especially in the crypto space. And I can pull up just dozens and dozens of charts and find these levels. You know, it's not going to tell you exactly like, where the magic numbers are, where to, not necessarily to buy and sell, but it will give you a good indication of where the resistance levels are. And it's very important to understand and know those things, because the price might be climbing and climbing and climbing, and you're thinking, oh, I'll just wait till a pullback happens. Well, you need to understand, is that pullback, it's probably reaching up and out to a major Fibonacci level. And if it hits that level, it will, sellers will jump in and just sell the crap out of it, right? And that happens so much in the crypto space that a lot of people, like I got wrecked so many times by that, not knowing that that's what was going on. Once I understood it and watched for it, then I knew, like, at least I knew, like, hey, we're starting to see resistance at this level. I feel more comfortable, trimming my position, because I think it may turn around now. And that happens a lot. I can give you a great example of this, not in the crypto space. If you want to pull up, it's the Dow Jones Transportation chart. You can find something very interesting, and actually, this is an indicator. This indicator should have told everybody on this channel that the stock market was about to crash.
Hang on, before you go any further, I just don't want to get too far away from these comments.
Oh, okay.
Let's Gamble, Seth, do you also use volume shelf? I don't know what that is. I find it very interesting that by the biggest, by far, is at 11K, exactly at the 61% Fibonacci. Does that make sense?
I don't know about volume shelf. I'll have to look into that one.
No, I guess you don't. I guess you don't do it. Seth, are these indicators for other sectors?
Definitely. Yeah. In fact, they're not new. You can go back even before computers and see that these Fibonacci numbers were being used. I've seen them go back as far as the early 1900s. So they're not new, and they've probably been going on for a lot longer than even that.
Okay. And then Jay, I just have to give John Q Public says 17.5 is our bottom, and it's not going any lower. I'm getting close. We're agreeing, but I'm not sure if that's the bottom. But I believe you're right. It is going there. I think this next month is going to be, what I think is happening is we're going to be bouncing right at the bottom here for the next month at least. Go on, Seth. Sorry.
So were you able to find the Dow Jones Transportation? The ticker is, let me pull it up here.
I got DJT.
Yeah, DJT. Yeah.
So I'm not in Trading View though. You want me to grab that in Trading View?
Pull up in Trading View, because I want you to use the Fibonacci tool to kind of show how this can look.
DJT, is that what it was?
Yeah, DJT. Stocks. Yeah, it should be indexes. I guess it's an index.
There we go. Nice.
As you
nice
do that,
clean board.
have you seen that one? I forgot who has this little chart, but it shows like where the purchases are going, like what countries are purchasing what, and it's like this little chart that goes back and forth. You know what I mean? Have you seen that? Where it's like I think it's called the heat index. Is that what it's called?
Oh yeah. I look at that on a daily basis. Yeah.
So the heat index.
Yeah.
The heat index. See, this is why I'm still scared of Bitcoin, by the way. Is if you could go and look at the heat index, Tom, if you get a second. The heat index is why I know it's going lower.
Market?
No, for just Bitcoin.
I've never looked at the heat index for Bitcoin.
So
you never have?
That Coin 360? Is that what you're talking about? Yeah, I use that a lot.
Coin 360.
Coin 360.
So, but what's interesting, and here's the reason why this is why I think Bitcoin hasn't hit a bottom yet, and the reason why I think
just a crypto heat map.
This is why I don't think we've hit a bottom, and this is why I agree with John Q Public, of that 17.5 could be the bottom. But here's why: is we don't know how much Bitcoin is still in China. And China is about ready to get wrecked. I don't know if anybody's been paying attention. China's going to get wrecked. And also Europe has some serious problems ahead of them. So there's major things on the horizon. And I think even though Bitcoin was actually for this reason, that inflation happens and now Bitcoin goes up, right? That's the whole reason we have we think it's a hedge against inflation, and we're supposed to actually flock to Bitcoin, but we haven't done that yet. And I think the last 2 years have been make believe numbers, and the reason why I say that is Elon Musk got into it. People were scared of the stock market because everything was falling apart, and I think there was an unnatural push, and I think Bitcoin was hot, and it got a lot more money than it was supposed to get to in following the progression of how Bitcoin was supposed to operate. And that's why you saw all these people flock into it, and that's why you're seeing all these Bitcoin miners, I'm going to say this, going out of business. Sorry, did I say that out loud? And because these last 2 years, I feel that you can't even use them as a good, accurate reason to judge Bitcoin or even the crypto industry. I think that you got a lot of people in there, they got a lot of free money, and they went after crypto, okay, guys? And at least this is in the United States. And I think that's also in other developed countries too, is they got a lot of free money and they didn't know what to do with it, and they all dumped it in Bitcoin, Ethereum, and pushed all these companies. And so that's the reason why I tried to take these last 2 years and throw them out the window. And then if you go from there, you start really getting a better understanding, I believe, of how the crypto market should have been and how Bitcoin should have been. So that's what I'm thinking, just so you guys know.
So what I would add to that is if you take Bitcoin, there's almost 4 things in my mind. There's stable coins, which are its own thing. And then you've got Bitcoin, which is its own thing. Technically, everything else is an altcoin, technically. But Ether is on such a large scale at this point that, to me, that's its own thing. And BNB is actually getting there. But if you look at the altcoins, they had a full-blown, since the peak, this might have been the worst crypto winter they've ever had. Almost every single one of the top 30 was down 90% or more. So,
yeah,
I mean, we got Bitcoin didn't get, to George's point, they didn't get it didn't get that 15 or 30x on the way up, so it didn't get a full-blown, 85 or 90% down. But that's why I think we're in that sweet spot, even from that perspective. Even if you go along with what George is saying, and really that run-up was false, I think for the rest of cryptocurrency, it followed its 4-year cycle where the altcoins ran up and then they went into a deep crypto winter. And, I don't know, but Bitcoin didn't follow that cycle at all. So it has broken. There's no doubt whatever happened after this halving does not resemble the previous cycles. I don't know if it's because Bitcoin's more mature or a combination of what George talked about and some other things, but we're that reliable, like, okay, we'll just wait for the halving and everything will go up 30x. That did not happen for Bitcoin.
I think the cycle actually got cut off short because of this Dow Jones transportation chart I'm about ready to show you.
Okay, right.
I'm sorry.
So in all honesty, if you out in the general stock market and those that are very knowledgeable in this space, one of the leading indicators that they actually watch and follow is the Dow Jones transportation chart, because the transportation stocks will typically sell off before the Dow Jones index or the industrials will sell off, and the S&P 500 will sell off. So it's the transportation ones, if you've got issues with transportation inside of your economy, then that means people are buying less stuff, shipping less stuff. Things aren't moving around like they're supposed to. So if you bring up this chart and if you understand Fibonacci levels and how they work, what I want you to do, Tom, is use the Fibonacci retracement tool. So it's in the that one. And go from the top of 2008, so the great financial crisis, to the bottom of the great financial crisis.
Let me go
So
to
you might
the
want to, yeah, you're on a weekly, that's fine. So go from the very top to the very bottom. So
from here to
Yeah.
here.
Yeah, click once and drag to there, and then drag it all the way out to the right, so that way people can see how they match up.
Yeah, technically that's the bottom. So
Yeah.
yeah,
And then
That's
I want
wild.
you to, yeah, go to the settings. On the upper, yeah, the settings, little gear
the
at the
gearbox.
top. Yeah, there you go. Add another low. Oh, you have it on there. 2618, 3618, yeah, 4618. Yeah, you've got all the good levels in there.
Okay.
So if you look at this, what you quickly kind of visually see is that you actually have some good reactions that actually happen at some of these major levels. You're missing one. Do you have the 618 or 1618 and the one? Sorry.
That's all right.
Yeah, actually the 1.309. Add that one.
1618.
Add the 1.309.
Is
So
it
add
a
a new
default
one.
or do I just add?
Just add it. 1.309. Yeah, there you go.
I don't think I got the point. All right.
So yeah, that then you can see it now. So it not only has it had major reactions at these major levels, but you'll see it also has been using these levels for back testing.
So which
but very
one did we just? Oh,
specifically,
here we go. All right. So just for everybody, and I'm just trying to follow along too. We just added this level right here, and you can see we tested that twice. I mean, this is over the course of years, from 16 to 20. And this one is the, this one's the event we're not allowed to talk about.
So notice we got a major reaction at the 2618. Multiple touches on that line. If you want to zoom in, you can see it. But there, we probably had 6 or 7 interactions with that major resistance line before we had a hard correction that came down. So that was kind of giving you an early indicator that there was, trouble in the markets, when it was having these reactions to that major level that it couldn't get above. Once that crash happened, it came all the way back down to that major resistance level. It did bounce from there and was just green, 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 which then gave you an indication like, hey, we got above that level, we broke through it, we're on a whole, like that would have given you very strong confidence that the broader stock market was in this bull market, right? But as you can see, it gets close to the 4.236. The 4.236 historically has been a very strong full Elliott wave level. And what I mean by that is, basically 5 waves to a drive to a peak. The 4.236 has been that top of the market indicator on multiple different charts across multiple different areas and sectors. And what I think, and I haven't heard anybody talk about this, but look at that major shooting star that you see.
Here?
Yeah.
Yeah.
Have you ever seen a chart look like that besides in crypto?
And yeah, that's fun. And it's funny because this is November 2021, and you can see we candle wicked way out of this, but we closed well within it on its way down. So
so there was major short selling that was happening at that level, and it probably shot way up because it actually breached that level and just obliterated that level. But within that same day, it was just insane. It went up 14% on an index in one day. So I think don't they have like a 15% like stoppers in place on these major indexes?
Yeah, that's a monster. Think about that on the S&P 500, for instance.
You completely blew the charts out of the water on one day, and that was considered, and it sold all the way back off as a major shooting star on this indice, basically a month ahead of the major stock market correction that we saw. And
That was
so
a
if you
clear
were-
top, and that
Right.
corresponded with the crypto top. I mean, that was right, probably almost simultaneously.
Yeah. So this chart also should give you a good indicator of whether we're recovering or not, right? So if this chart continues to not recover and maybe does a back test of the 2.618 level, I think, George is right. Like there's going to be problems. That will give indicator to the broader market that we're not in a recovery. But if we can get above or get closer to that 4.236 level, I think we will try to test it again, is what I think we're going to do. I think we will come back up and try to hit it again, but we may hit it a few times before. And if we never get above that line within, a short period of time here.
How strong is this 3.618 line? Is this a significant line?
Honestly, that one I've not seen as strong in all of my analysis, but
So
the 2.618 and the
these
4.
two is what you think
Yeah,
are the
those
stronger.
are kind of the big ones. Because when you get in the final wave, the fifth wave, that one is the biggest one, and it's usually goes from the bottom to the top and all the way to the top of that is typical.
So I'm going to keep these settings right on this with the Dow Jones transportation, and we'll check in on this and see how it's doing. One of the things is the reason I never show the Fibonacci's is because I'm going to say complicated only because you can start in different places. You know what I mean? The retracement tool, where do you start? Where do you finish? And if you don't know what you're doing, or more importantly, if you don't know what everybody else is looking at, you got to be looking at what they're looking at. Because if you're looking at the wrong Fibonacci levels, then, but there's no doubt, and I feel like these are to some extent like the market, it's a chicken or the egg thing. The market reacts to these levels, so they are significant. Whether they're manufactured because they're self-manifesting or, whatever the reason is. I mean, you could see we bumped into this line and then boom, we bumped down to that line and then ran up. But you really got to know, you got to do a little bit of research and understand how to use this tool.
So some of the comments out there is, they're confused whether I'm bullish or bearish. I mean, long term, certainly I'm very bullish. Bitcoin did reach out to a 4.236 extension on this cycle, and we got a correction right at that level, and we corrected hard from that level, right? So we've come down 70 or so% from that level. So what I'm saying is, we are crashed, we've come down, we've capitulated. The other charts that I'm showing and bringing up is showing that we are in range of where normal capitulation happens. We've even seen the miners selling their Bitcoin, not because they wanted to, but because they were forced to. Further capitulation. These are all the things that happen at a bottom. So once again, the time to accumulate, the time to be in the space is when everyone else is fearful and it feels uncomfortable to be doing it, right? When you just want to look away and just, click the button, that's the time at which you're actually getting in at the right time.
Hang on, I got to answer a few questions. I'm not shooting from the hip. Here's why I want to discount the last 2 years. The last 2 years, yeah, they're still part of history. But what I'm saying is you can't pump, how many trillions of dollars did we pump into the United States market, Tom, in the last 2 years?
Oh, I countless.
Yeah. I mean,
we don't even know.
Right. There's still a theory that that they're still pumping $1 trillion a month into the market. And there's still a theory. I don't know if that's true or not. So, I mean, you can't just put all that free money out there and not expect to have a pump in Bitcoin or any altcoins, anything. And I think that's what happened. I think that's why everybody's like, so, when's it going to get back to $60,000? Well, we just got all that free money for 2 years. Okay? And that Bitcoin took off with that free money. Now it's pulling back. What's the reason? Because I believe they're dumping the snot out of it because they don't want anybody to make money. Whoever they are, I don't know. But I believe almost every asset class is getting hit between now and the end of the year. That's not from the hip, by the way. That's just I feel that's a fact. I think gold's going to get hit. I think silver's going to get hit. You're already seeing oil starting to get hit.
Yeah.
And there's no reason oil should get hit right now, guys. I mean, look at what natural gas is going to do. I think what we're heading into is something amazing from a financial point of view. Not good, but amazing bad. Like these will wreck people, or these will make a lot of people rich. And what our job here is to try to help people to understand what's coming, to realize that, yeah, we could be getting close to the bottom. And I believe we're a lot closer to the bottom today than we were yesterday. Does that make sense? See, when you take and you do forecast models, and this is a great lesson for everybody. I hope everybody really listens. Just because I'm forecasting today of what's going to happen to Bitcoin tomorrow doesn't mean next Friday I haven't changed my mind. See, when you are doing education and you're educating yourself, and you're also looking at world events that are happening on a daily basis, they throw everything out the window. And then if we want to throw Bitcoin miners into it, you get the at-the-shelf offerings, and they destroy your price predictions.
Well,
You know
the
what I mean?
situation changes on the ground. So
Yeah.
I just want to reiterate this point for George, because and again, I want to thank everybody for all the positive comments. Most of you guys on the stream leave me comments, and I appreciate it, and there's a lot of positivity. But from time to time, I do get the negative comments, and it's, oh, you're a flip-flopper, you just changed your opinion, and it's like, well, the facts changed. You know what I mean? I can't ignore, if the facts change, you've got to continuously be monitoring your stocks, the market, the external events, internal events. So, yes, this is not just one steady, fixed.
And I have to put one more thing out there so people understand this. Looking at what is going on with gas, and when I speak, guys, I'm only speaking about the United States. I'm not speaking about worldwide. You know what I mean? So just, looking at just the cost of per barrel oil. Do you realize why it's that way? Does anybody understand why it got hammered down? And it really has nothing to do with supply and demand at this point in time. It has to do with the government interference. And that is the reason why it's been driven down. But listen, that's going to go away.
Are you talking about us selling off our reserves every day for millions and millions of gallons?
And you think about that.
Our levels are lower than they've ever been.
You got it.
Is that what you're talking about, George?
Yes, exactly. And so
that's the situation changing on the ground.
That is a great example of things that are happening that I believe we're headed for a disaster.
I mean, you could take the flip side of that and say, hey, at least we're selling at the top.
Yeah.
That's true. Let's hope.
Well, and I won't. Okay, I got to say the truth.
Let me interject before you do that. I just want to ask everybody to please smash the like button. I know it seems silly, but it does help the channel out a lot. So my button is broken to ask. So if you guys could do me a favor and smash the like button. Also, I don't know if everybody already sees this. I put a poll up. I have always been very hesitant to use the Fibonacci retracement tool for the reasons that I talked about, but it is a very good tool. So I put a poll. Do you guys want to see me do this in videos? I've steered clear of it in fear of it being overcomplicated. But if you guys like this, let me know.
So the last thing I was going to say was the person who bought the oil before has probably made more money for the United States than any tax agency has in the last. Not saying more money than the tax agency. I'm saying outside of it, he's made more money than probably outside of the tax code. Does that make sense?
Who was that person?
I forget his name. I don't know his name. But he bought at the bare bottom, trying to find the bottom, and he's like, well, I'm gonna freaking at $25 a barrel, I'm gonna load up.
Yeah, completely filled up our reserves.
Yeah,
more than they've ever been, I swear.
Yeah. Oh yeah, they were bursting. I tried to actually buy oil, and I couldn't do it. I tried to. I remember, Tom.
They were giving it away.
They were giving it was a negative basis. I was just like, how is this possible? It was negative $100. You just had to pay for shipping. I'm like, I'll take that.
Give it to me.
Give it to me. Where are you gonna put it? Oh, I only got a 500-gallon tank.
In my veins.
Yeah. Can you imagine? I mean, there's a great one, man. Oh, wow. Sorry. We got to start wrapping up, Tom.
All right. So, yeah, I'm just checking in on the Bitcoin chart. So we're pretty much, since the market closed, This is the 15-minute. We're very sideways. So we've been
Did you guys-
over and under 20,000 30 times in the last week. So let's
Did you
do
guys-
predictions. Who's got? Are we going to 17,500? Here's the choices: 15,000, 17,500, or 25,000. What's next?
I'd say 20. I was hoping you would bring that number in.
Well, we're at 20. You're right. 20's definitely next. It's 5 minutes from now.
I don't think that. So here's what I think's
You
going
think
to
we're
happen.
going to go sideways?
I think we're staying sideways. I think we're going to stay in this really tight range between 19 something and 20,500, 20,800 at the top. But I don't think we're going outside of that range right now. Not until we break out, and I think that's probably a weak price, by the way.
So if you're going to ask me from a technical analysis perspective, we were in a rising wedge and we broke out of the rising wedge. And if you break a rising wedge from a technical analysis perspective, your price point is back to the bottom of the wedge. So
did you start
technically
that
that's
wedge
where
at?
we should be heading to.
I did a wedge two ways. One points me to like 18.5 and one points me to like all the way back to 17.5. Is that what you're thinking? That's the bottom of the full wedge?
It would be the bottom of the wedge. So technically it's what we hit in June. So we would have technically a double bottom is what we would have. We would bottom once, bottom again, same level, and then go up from there. So if you're looking at technical analysis, that's where they would tell you the price point is to go buy. Now,
Yeah.
I mean, personally, I think enough buyers have been in and even leveraging in to get us not back to that level. And so personally, I'd be looking to a Fibonacci level in order to determine where we might bounce from. That's where I'd be looking for.
All right, we got a bunch of people that weighed in on this. Let's see what they think. WLG says between 17.5 and 25. My guess is baseball. Okay.
My guess is baseball.
And
John-
John Q says 24 and sideways. Yeah, I think we're staying in this range. I don't even think we're going to 24 or 25. I think we're staying really tight right now. And I think these are computer programs that have been set up to maintain it at this point. And that's why I don't think it's going to go outside of this range. I think there's so much pressure at the $20,000 mark to buy and sell that, and I'm going to tell you something. And do you remember the name of that guy we spoke to, Tom? That is going to be the system that I'm going to recommend that everybody buys.
Yeah,
whatever
if we
the name of
remembered
that
his
is.
system, I got a stack of 30 cards from that conference.
That guy,
One of them's his.
he spent 50 grand right in front of us. Hang on, let me buy a Bitcoin. That's when it was 50 grand.
Two shout outs to Seth. Alex says, thank you, Seth, for your input. And JD says, yay, Seth.
Thank you,
Seth is
Seth. Yeah,
top
we
notch.
really enjoyed
Thank
your time.
you. So, yeah, Seth, thank you. Everybody, thanks for tuning in and watching. And thank you, Seth. And I just want to answer one more. Anders asked me if I'm bullish on Bitcoin. Do you think it will reach the same levels as before? So I am long-term bullish on Bitcoin. So the 30-day, 60-day, 90-day question is always very, very difficult. And I gave up answering that over a year ago. But when I look at 2 years, 5 years, 10 years, I'm extremely bullish on Bitcoin. I think we have not yet begun to go where we're going. So yeah, I do think sooner than later we will take out, even though 69,000 seems like it's forever away, 2 years is not that long of a time. And I think we'll get back there in 2 years. That's my opinion.
Only thing I got to say is XRP. Forgot to say anything about it, so XRP.
Shout out to XRP.
Can I say something quick about that?
Yes, please.
So I'm also an XRP fan.
Oh, I didn't know that. Woohoo!
And we talked about it at the Bitcoin conference.
I know. I'm just kidding. They don't know this.
So, and here's the reason why is the SEC comes out and sues them, and they get delisted from all the other exchanges, and you almost can't even buy the coin at this point. And yet they're still in the number 2 to number 3 spot. They've maintained top 10.
Yeah.
Right. So they have some serious followers that all believe in this space. So what are they seeing that I'm not seeing? So I spent some time really digging in to understand this space and understand, why would the SEC go after Ripple and XRP and basically completely crush their, what they had going for them. And it was very clear to me that they were doing that specifically, not because they necessarily wanted to completely just demolish their company and make them go away, but they will be the first company that gets through this SEC process. Once they go through this SEC process, yes, the SEC wants their hooks into everything, but they will be greenlit for all of the other institutional investors to go in and buy when everyone else still hasn't gone through that process, which then becomes fear for everything else, right? So I will just tell everybody, pay attention to who the SEC is going after, not necessarily because it's it's fear and get away from it, and if the SEC is going after it, that must mean it's a terrible project. Think the exact opposite. They are signaling who they think are the best, or some of the more dangerous type of, not dangerous, the more disruptive type of projects that are out there. XRP being one of them, Flexa Network and their AMP token being another that just recently got announced. I'm telling you, these will recover one day, and when they do, you will kick yourself for not investigating them and understanding what they were planning on doing, what they're doing in the world today, and where they're actually going.
I want to add to that, but I want to do one thing first. I did not notice at some point from MCNA we got a super chat, so I just wanted to say thank you for that. I appreciate it. I didn't see it when it happened, or I would have shouted it out right away. So thanks so much. And to Seth's point, and to George's never-ending point for me, because we have this conversation every day. The thing that I'll reiterate is it is impressive that XRP has sat in the top 10. It's never left the top 10, even though to a certain extent they've almost made it illiquid, and it's hard to even, in the United States, it's hard to even get your hands on, yet it still remains in the top 10. So there's a core following there that is, every bit as strong as there's the Bitcoin purists, there's the Ethereum crowd, and there's a strong XRP crowd. So that's my 2 cents.
And Ethereum, who knows what's going to happen? It's like I said, somebody said, where's Ethereum going? I said like this, because I don't know. It's either going to go way up or it's going to go way down. No one knows. Everybody's shaking that magic 8-ball. But here's the thing, and this is where I'll end it, with XRP, and this is why I love it. Tell me another currency, crypto, well, I'll say currency. Man, the SEC would love me hearing me say that, wouldn't they? Tell me another coin token that does settlements as fast as XRP. And there isn't one out there. And that's what it's made for.
No, we didn't talk about the Fed now, did we?
No, we never did. I said that's what I wanted to talk about.
We'll save it. We'll save Fed now for next week. Everybody, what?
We don't know how many people are in the pool for a marathon, but the marathon pool did okay last month. By the way, it did like 143.
Okay, because the thing that I'm looking at said it did 0. You've got something that's showing that they mined 143.
Yes, yeah. It's
that's interesting.
I'll send you this in Discord. And guys, please join our Discord. Please join.
Link in the description.
So at some point, Marathon's going to start actually mining Bitcoin. So don't be surprised. I know it's been disappointment after disappointment, but they do have a lot of machines, so they're not going to sit at 0 forever. Having said that, you guys know my feelings on Marathon, and if you don't, you can watch like the 8 videos I made.
Darren, Trump bought that oil. I don't know who bought it. I just know somebody was smart. Thanks, guys. Have a great one. Enjoy your weekend.
Thanks so much, everybody. Enjoy your weekend. Thanks for joining us. Thanks for
again,
all the likes,
Seth.
comments, everything. Thank you, Seth, for coming on. He brought a lot of some interesting new stuff to the show, and we're going to keep our eye on it.
Thanks again, guys. Take care.
Have a great weekend.
Bye.